See, the problem with trying to tax the rich is when politicians say they're going to tax the rich or make them pay their fair share, they don't actually mean they're going to tax the rich. They mean they're going to raise income taxes on the highest earners. But the highest earners are not the rich. Like in 2022, Jeff Bezos' salary or taxable income was $1.7 million, which has remained the same since 1998. For context, one of Jeff Bezos' houses is worth $175 million, or $165 million, depending on which YouTube screenshot you believe, but it's not really important what the specific number is. The point is, he obviously didn't buy this house by diligently saving his salary for over 100 years. He bought it with debt, with borrowed money. He buys everything he buys with borrowed money because you don't pay taxes on debt. And when you're Jeff Bezos, you don't pay much interest either. And half the time they don't even really own the house. They own a company that owns the house and the debt. And as long as the company keeps reinvesting anything that might be construed as profit, then they don't have to pay any taxes on that either. So you don't have to pay any taxes on profit that you didn't make. So essentially, when you're this rich, you just go to the bank, ask them to buy you a house, live in it until you're bored. Then by the time you want to sell it, the value has gone up. You use that increased value to pay back the loan and the interest, and you essentially just were given a free house for a while. Then you just repeat the process. But of course, there's no such thing as a free house, so who's actually paying for the house? Well, banks don't actually lend people like this their own money. When a bank lends money, it's circulating new money into the economy. That's where the loan comes from. And money doesn't really have inherent value. It derives its value from the things you can buy with money. Things like houses, things like labor. That means that the more money you circulate into the economy, the less purchasing power that money has, and therefore the more valuable things like houses become. You might notice that this increase in the value of resources relative to the money doesn't seem to be applying to one specific resource, which is the resource of labor. That's the resource that the people own. That's our time and energy, our blood, sweat, and tears that we exchange for money. That's where the missing value is coming from that's fueling this billionaire utopian debt-based economy. That is what's buying Jeff Bezos free houses. So when they do say tax the rich, they usually mean tax the upper middle class, who are certainly rich compared to most of us, but they are not the driving force behind the growing wealth inequality. And a lot of them are small business owners. Those are the actual job creators, the people who create jobs in their own communities, the people who are kind of the last thing standing between us and total corporate hegemonic monopolies.